Shares of Nordstrom are falling after the upscale department store chain cut its full-year outlook. The results show how consumers are pulling back as inflation starts to pinch. For more on retail's winners and losers, Stephanie Wissink, Jefferies senior research analyst, joins us now. She has a hold rating on Nordstrom and a $21 price target. Stephanie, maybe you can help me figure this out. You had Macy's yesterday cutting its outlook, talking about inventory problems. Nordstrom doing the same thing, and yet the recipients they have received in the market very, very different. What went so badly for Nordstrom that didn't seem to go off that badly for Macy's?
Yeah, I mean, it's a game of expectations. So clearly Macy's had done a good job coming into the quarter by hedging some of that downside. I think the expectation for Nordstrom was that it was going to be an outlier to the positive. And the numbers at the headline level weren't terrible. It was that guidance that really shook everybody. And I think some of the commentary that started to underpin that maybe the inflation pressure is not just isolated at the low or bottom end of the middle income range, that it's now starting to sneak up into that higher middle income level. And that was probably the thing I think that's shaking people the most today with Nordstrom specifically. The other thing they called out was anniversary sale was up 5% year over year, and that did miss their expectations. And that tends to be a proxy for fall fashion more broadly across retail. So slight miss there on the anniversary sale, I think also is creating some consternation today.
Stephanie, can I just ask you a slightly, it maybe is a left field question, but it's just related to the news that we just got. If we see significant student loan forgiveness from the president today, would that be a positive for retailers? How do you think that would work in terms of how quickly it would flow into the economy, into the retailers?
Yeah, I think if this was the first motion of forgiveness, we would start to calculate what we think it could be in terms of a tailwind. But this is an extension of a multi-year forgiveness cycle and conversation. And so this really just defers for a few more months. You know, we won't really know until we get to the back half of the year whether this is going to be something that's more significant in terms of overall forgiveness or give back. But I would say today, when we look at that millennial Gen Z cohort, it's a very powerful cohort in the broader consumer economy. But I don't think that this announcement today is necessarily going to change their spending patterns in the immediate term, because it's just deferring what could be a reality of repayments starting in the early part of next year.
But obviously there is an income bracket component to this. And you were mentioning earlier kind of the vulnerability of the middle income bracket. What retailers are most vulnerable to that softness?
Yeah, Kaylee, this is a great question because there's two parts to the question embedded. The first is that when we were thinking about recession initially, we were thinking about the low-income consumer being really bearing the brunt of the recession. But now you have Kohl's, Macy's, and Nordstrom all signaling that that middle income is getting squeezed. And I would even throw Walmart and Target in there a little bit too, based on what they talked about in terms of cohorts, that it's not necessarily a low income recession. It's more of a middle income recession on the good side that we're seeing right now. So that was one of the common threads across Kohl's, Macy's, and Nordstrom this earnings cycle, is that they all talked about that middle being most under pressure versus the low end. Low end seems to be holding up okay in terms of wage growth, but there is definitely some behavioral shifts that are happening around gas prices and food inflation. But the middle is the one that seems to be the most vulnerable right now.